Morning everybody, welcome to Stockradar Stocks of the Move for another week. Today's date is 28th of August 2025. My name is Richard Lee and I manage the stockradar.com.au website for you. Well, Harvey Norman, Ventia, Suncorp, Dow, APE, Brambles, 360, Telstra, NPL, Org, Wes, Newmont, ResMed, JBH, Coles, all making new highs in this wonderful market. Reporting season has been a revelation maybe, not unusual, volatile for sure. We're on the right side of most stocks. Even little TAH has had a good jump last week, and one of our favourite little stocks, Minnows, AFG, is kicking goals as well. So stocks falling down around the ground have been CSL, James Hardie, Reece, AGL, DNP, wow, Woolworths. Some floundering at their highs are CPU and IAG. So it's a mixed market at the moment. We're on the right side of most things at the moment. But that's where it stands. We've been lots of flops and lots of good ones today. And the Coles wow story is a really interesting one as well, as is the banks. So we'll have a look at those a bit later on. But for now, we're going to go straight into our trend intensity ratings and see how they look this week. Mixed bunch again. Megaport's up the top. Lottery Corp finally had a breakthrough and is doing pretty well. We can see that in the chart there. Harvey Norman's doing well, making new highs, all-time highs. Challenger, Brambles, ANZ, broken higher, 360. Telstra's still doing well, as is Medibank Private, as is Wesfarmers. So we still have some old stalwarts there at the moment, doing pretty well. But then that's, I guess I work in that ASX 200 area. The safety of it keeps me safe for the most part. So that's, that's just one of the risk parameters, I guess, that helps me control what I do. I don't want to be exposed to too much on the downside. Now, stock pick update, stock pick count. We're up 4 this week, so we've had 5 new ones this week, and we have 18. We're up to 63 stock picks of 160. Probably one of the highest levels it's been for a while, I guess, but still not that fantastic. Breadth is still pretty narrow, and as you can see from the stocks going down, there's some pretty heavyweights going down there, and plenty of stocks still very weak at the moment, not doing too well, which means opportunities, I guess, in the end once they do turn around. I thought Woolworths was going to turn around the other day, and last week it's been edging higher and higher, but all of a sudden that numbers came out, and it was pretty poor. So that's where we are with that. So the stock pick count, portfolios are all full at the moment. Let's go to the overseas markets and see how they look now. First off, Dow Jones. The indices aren't much changed, so we don't have to worry too much about these. The Dow Jones is making new highs, as is the S&P, as in the Nasdaq. Nothing showing up on the volume figures really to cast any doubt on these trends, so we're just looking for some more upside on this ones here. Our market's also doing pretty well. ASX 200 had a nice little break here above 8545, and it's kicking high up, nearly up to 9,000 now, which is fantastic. Momentum is very good, as you can see down the bottom there. So that's the top 20 stocks there, I guess, basically. Gold still hovering, climbing ever so quietly towards its highs. Still sitting up there. We've got a little high lows, high pushing here, but the sellers are holding there for the moment, so we might need to see another breakup for gold. Copper's pretty all quiet at the moment, nothing really happening after that dump, and the same thing with Brent crude. It's gone. The pressure is still down there. It's tried, it's failed, and it's still pretty weak at the moment as far as I'm concerned. Okay, so that's the overseas markets. Our markets. Well, okay, let's go firstly to Megaport 1, which has had a little break up here. We've been on this one for a while. It's had a nice little trend reversal down here, and we're now getting a larger size trend reversal, which is possibly looking for us to move towards the next resistance, which is up around 2150. We had some selling here last week, didn't hit the market too much. Apart from that, the averages and the momentum index are all good. We've got a trend intensity rating of 9 on Megaport, still looking pretty good for us. Okay, National Bank. Okay, just going to go through the banks a bit. It's extraordinary what's been happening here. All of a sudden, CBA has slowed, and NAB has rallied to new highs. As we can see, the 2015-16 high there has been taken out. Interesting. So I'm going to go through the other banks in a second pretty quickly, but this is a fairly strong move we've had for CBA for a while to actually reach new highs. Now, it hasn't made new highs for 10 years, so this is a very interesting move to me. I'm watching this very closely because that's a very sharp move higher. CBA, as we know, has slowed down, but let's just have a look at NAB and Westpac. Okay, so we've got Westpac, similar situation here. It's almost got to its highs, had a good rally this year, almost got to its highs, back to those levels around about 215, 216 again. If we get through there, well, you know, it's an interesting thing, but the banks have been slow to respond. But all of a sudden, we might be getting a golden era appearing on us if there's these highs taken out, and they start making new 10-year highs, which is pretty impressive, I would think, for all these banks. Now, CBA has already done its work. It cleared above its 2015 high a long time ago. So these banks will be a bit slow, but we might be in catch-up mode. And as I say, looking at these moves on the highs, and you can see ANZ again here moving towards its high, which is up around $36 at the moment, and it's had a nice little break up from, you can see the old high there, 215 there. And we had a nice little break up through this resistance area here, this congestion area here, and we're heading towards this highs at $36. Who knows what will going to happen? Trend intensity rating is 10. We bought this one, we raised our stop. So those three banks are all in there at the moment. So it's an interesting situation. And as we see with CBA, it's probably just slowed down a bit. It's had a bit of selling hit there. It's not, it's not unusual for this to happen. The trend is still up, I guess, at the moment, but we're still seeing this selling here. So it's been down for quite a few weeks now in the face of the other banks going higher. So the switch has been on, and that's what's happening at the moment. So the banks are interesting. I think firstly ANZ, NAB, Westpac looking very interesting at the moment. Okay, now we go to Coles. Well, interesting story. Coles, it had a great breakout. It's come back, found some support at the old breakout area, and in no uncertain terms, it's made another new high. Bang. It's kicking Woolworths down the track nicely, so we're very happy about that. But it's extraordinary, really, when you look at these things. Coles and Woolworths, how can they be so different all of a sudden? Coles, it was $14 back in October 23 and is now $23. We've got Woolworths, which in October 23 was probably around about $38. It's now down around $28. So this is what can happen. You've got to be very careful about playing sectors and thinking every stock's going to move the same way, because they don't. And then we've got a little stock called Metcash, which sits in the middle of this, which is also doing very nicely. Thank you very much. So an interesting story, but again, the trend is your friend. The trend is down in Woolworths. We don't hold it. The trend is up in Coles. We do hold it. So that's just the story that we follow. Fairly simple, really. Okay, Lynas Rare Earths. Now, I just want to talk about this one, a little one. We had some great gains on this one here. Every now and then you get one of these stocks. We want to talk about my portfolios as well here. So portfolios are not about getting the right stocks, but playing the numbers game of using the same repetitive behaviour of taking entries and exits from with a group of stocks. There was a probability factor of getting a powerfully trending move in your portfolio. So Lynas sits within a group of stocks that we follow on our top 100. So it happened to be one that came in at the time when we needed it, and it's also been responding pretty well. So again, if there are 10 stocks that are going up in that area, you might get one or two of them. It doesn't really matter. As long as you get one or two of them is the main thing. So portfolios are about playing the numbers game and taking the entries, no matter who they are or what they are, from a group of stocks, and taking the exits when we're told. So at the moment, Lynas is in the portfolio and it's jumping, and you can see our portfolio has done very, very well over the last couple of years, and that's because with stocks like Pro Medicus, Lynas Rare Earth have all been in there driving these markets, IAG, and there's been a few stocks in there that have really pushed that portfolio high. And at 20% on the 5-stock portfolio as a holding, it's a significant amount. So that's what really drives our trends when the market is running well, like it is now. And that's where we make our money, because during the tough times, we're conserving it and we're trying not to lose it. Okay, so that's Lynas Rare Earths. It's still rating a 10. The trend is up. Volume's good. Moving average is good. Momentum's good. Everything's green there. So who knows where it will go. Follow with your stop, and which we're going to talk a bit about later on, and you'll be fine. Okay, Newmont, just showing you this one here. The gold stocks have been a little bit iffy-butty. Northern Star, Evolution have all sort of come off the ball a bit, and a few other stocks have been a bit erratic, considering what the Australian dollar gold price is doing. But Newmont has been very, very steady trender for a while. Now, it was around about $47 back in February 24, so 18 months down the track, and it's now $110. So it's been a great mover. Had one little correction back here, then we're back onto this one here, and it's been a really nice rise. And so since about December, it was about $60. It's now $110. So again, Newmont, sitting in that big area of ASX 200 stocks, good quality stocks, where the risk is limited. The gains can be just as good, and I think not quite so dangerous. to work in that area. So plenty of good gains going on there, and Newmont has been one of them. Sandfire's another one which has slowly been building an uptrend, but over the last couple of months, over the last couple of years, since the mid-24, it's had struggled around here. Now we're starting to look like it's starting to clear away from this level, and it's going to continue this trend that we've seen that started up and down around about $3.50. It's now up around $12.70. The market's doing pretty well. We're starting to get a bit of volume through here. Momentum's better. Moving average is better. We've had a few false starts here, and it hasn't got through. This time we've got a high low here, and it's now broken up. Trend intensity rating is 10% by. So that's also starting to clear away the old high as well. So we're in new high territory, which is always exciting for us. Okay, so Sandfire's looking pretty good. Okay, we've got Transurban, which has been, I almost thought it was going to be going a little while ago, and then it failed again. But really, we've now got another move here with Transurban. This is a long-term chart, the trading range you can see since 2020, so 5-6 years worth there. But if we go to the more recent area here, we can see that the market has broken through a small resistance area here, come back, had a higher pull, created a higher low, and has now created a higher high. So we're starting to get this high low, high thing happening, and it may well be if it pushes through the highs here, then we may get a trigger here for a buy. But it's looking pretty good because we can see all these green bars here. The volume's definitely changed here, and you can see the green, the green's pushing the upside. Bit of selling here, but still the price is holding pretty well, and the green bars excuse me, are coming back in again. So Life may well be coming back into the Transurban market. So there might be things changing when I'm looking at what those big banks are doing, what Transurban's doing. There's a few things happening there that are suggesting we can move in and out of some stocks, and that's what we try and do, because we can take some good profits on some stocks and enter into some new ones. So we always keep those stocks moving along as we can. Okay. Excuse me, tickle. Super Retail Group. Well, this has been an extraordinary stock. Pays about an 8% yield, or was paying an 8% yield since it rallied the last couple of months. Excuse me. But it made a new high there. Super Retail 10. You can see back here, we came back to this old high here, found some good support here, and this rally from here, really the buyers really have taken the mantle here and driven these sellers back into their cave. And you can see here we've now made new highs. So this was building. Now it's exploded through these two resistance levels there and looking very good. So Super Retail Group is back on track and looking good. Always a bit tricky with volume because it can be a bit thin, but that's just the way it is sometimes. Can't do much about that. But as I said, the other things, the price indications, moving average, momentum indicators, then what we rely on just to a large extent. Okay. So that's about all the stocks I've got for today. Just two little ones I'll mention to you. Even little Tabcorp's having a run under new Gil McLaughlin. So we saw this one here. It's changed its trend from down to up. We've got the switch here through the average, through the downtrend line. Then we've got the high low, and then we've got a trend reversal here. And we almost got stopped out here, but we were just saved by the result. And it's now kicked up high. So the trend is now starting to develop here quite nicely for Tabcorp. So it may well be back on the winner's circle for that. And the other one I want to show you quickly was AFG, which is a small stock that's, again, I know you think I'm crazy, but some of these little financial stocks, Carlton, AFG, Pepper Money, interesting little stocks at the moment which are attracting plenty of attention. So this was, earlier this year, March, it was $1.46. It's now $2.80. So it's doing pretty well. So little stocks like that, they can move pretty well. With those little financial stocks, I quite like at the moment. Anyway, so that's most of the stocks I've got for you today. I hope you get a bit of an idea what I think about the banks. The retailers are pretty interesting at the moment. So that's where they're all at the moment. Okay, so now I just want to go to the slides briefly. I mentioned a bit about setting stops at the start of this. And that was really a little bit, in this market we've got to be careful. We can't just sit down and just go on holiday and expect the market's going to continue high, because it will surprise you and it will bite you on the bum when you're not expecting it. So always keeping on the ball, always keeping vigilant. But with the stops themselves, there's always that balance. There's always that balance between risk and reward. And, depending on what your objective is, will probably depending on how you set your stop. Whether you're trading ranges, whether you're trading trends, there are different ways that you will adjust your stops in that situation. So it will be related to your objectives to some extent. But you've always got to, we won't always be right, but that doesn't mean you shouldn't still set your stops sensibly. So you're not always going to be right with stops, because there's no perfect stop. But you set them sensibly, you let the market breathe, you make sure you're not giving up too much of your profit, and that's where your stop's going to be. And I've got a range where I use mine, which is roughly, first thing I'm going to tell you, I use weekly stops. So my stops are never ever on the market. I look at Friday's close and I look at where my stop is. And if it's gone below, if the Friday's close is below the stop, I execute on Monday. If it's above the stop, the reversal level, I buy on Monday. So I'm never doing anything during the week. I'm ignoring the week, and I don't care what happens day. So I set my stops from Friday's weekly close 10 to 15% below. So I get an entry, and it's from the price on Friday. I set my stop 10 to 15% below. If there are things like moving averages or low points within that band, I'll probably use those because it just heightens the probabilities that you're going to be right there. And when markets accelerate, it's interesting, when markets accelerate or decelerate, you may want to tighten your stops depending on what's happening there. So with things like liners, the stop is probably less than 10% now. And again, when you get a stock that hesitates at a resistance level, then you might like to trigger up your stop a little bit just to keep protecting your profit. And some people will just get out. I stay in because I always stay in for the opportunity of a new high, but some people actually just get out and stand aside, which you can do. So there's no right or wrong. It's just a matter of being sensible when you set your stops. Don't react. If you got stopped out last time on a whipsaw, don't set your stop at 30%. It's too far away. And if you got stopped out, at a 30% one last time, you don't want to tighten it into 10 or 15% just to make sure you don't lose 30%. So it's a matter of finding that balance and being very, very consistent with it. Okay. So with trailing stops, I mean, they're my lifesaver. They're my risk management tool. They keep me resting at night. So that's what they do, and so I love them to extent. But remember the balance, okay? Not too tight, not too loose. Set your stops sensibly, okay? So don't be reacting to things that have happened previously. Make sure you set your stops sensibly. Okay, so it's important you do that. The complete risk management tool that keeps you safe is the stops, okay? And I love them because that's how I manage my risk, okay? Amongst other things in portfolios, holding amounts and sector limits, things like that. There are other variations, but the stop is the main one. Okay, so newsletter will be out next week. You can always take a free trial of Stockradar, check it out for 2 weeks, see where my stops are, see how I move them, get an idea of how I work. But that's about it for today. So as far as setting stops goes, there's no perfect stop, only sensible stops that help you achieve your objective. When your stop is hit, you exit and you move on. Don't procrastinate on the might have beens or the could have beens. It won't help you. Just get on with your next entry. That's basically what you do, okay? So you don't worry about what happened. You just get out. Small loss, big profit, whatever it is, it doesn't matter. Just make sure you do the right thing. Okay, so that's about it today. Watch your trends, heed your stops, keep it simple, have fun, stay safe, and I'll see you all next week for another round. And who knows where we'll be next week, but it's exciting times. Okay, thanks very much.